Hello and welcome everyone. This is John Person. I hope you take full advantage of our planning and scanning advisory service. This is a quick tutorial to help you get the most out of what to look for each and every week. So let's get started. And before we jump right into it, please take a moment to read this important risk disclosure statement, which, as all of you should know, that trading any product is risky, whether it's stock, futures, binary options, regular options, equity options, futures options, and again, ETFs. As we get through, first and foremost each week, I have always found it important to start off the week with a positive message, and so we have that. And in addition to figuring out what, in order where a market might go in the overall market, we got to ask ourselves, where's it been? So each and every week, I give a tally of what the year-to-date percent performance is in the most of the markets. And the major index, S&P, NASDAQ 100, Dow, the Russell 2000 small cap, and again, the New York Stock Exchange, NYSE. For the most part, I will give a pretty accurate assessment of the market, such as usually we go through, as I've been saying, for the month of February of 2017, usually the market has a seasonal tendency of declining in the second half of February, especially when we look at other indicators. So we could still see further upside, and the trend is our friend, and that's why we're looking at short-term low-risk buy setups. And of course, this has been an unusual year in the sense that we've had an incredible rip in the market due to what? New presidential election and mandates and new changes in fiscal policies. In addition, I always like to give what we see as quarterly support and quarterly resistance. That's the financial quarter, and those are the targets for the market condition of the S&P. So if the market is bullish, we're going to have a target resistance 239, and we're going to have, again, the low end of the quarter of 2011. So as the quarter comes to a near an end into March, if the market's trading closer to quarterly pivot resistance, it's something to pay attention to. In addition, we give out either monthly and weekly pivot resistance as it's important, and to see where the equity markets are in relationship to either the pivot resistance levels for the respected markets. And something we added as a request so that people can understand, well, where is the market? And the last price is as of Friday's close. So if you get this Sunday, you take a look at this and you can say, well, gee, the S&P, the spiders closed at 235.09. Monthly resistance, it's a little above it at 232. As you can see, the market's at 232, but quarterly resistance is 239. So it's actually almost in the midpoint between a monthly and quarterly pivot resistance, and this could be an area that would give you an idea of the market to stall. Now, in order to gauge the overall health of the market, a couple things that I like to point out is, number one, I always like to give out the technical observation. This is a technical report, and we look at what's the condition of monthly person's pivots. How many stocks in the S&P are near 52-week highs, and I compare it from 1 week to the next. How many stocks are near 52-week lows? If it's the same as the prior week, and in this case, I just list the symbols of those culprits that are near the 52-week lows, and there they are. How many stocks are above their 10-day moving average? That helps to give us an idea that if in the S&P 500 stocks, if they're all or getting darn close, 80% of them are above their 10-day moving average, it gives us an idea that maybe the market's a little overstretched. And thus again, how many stocks are below their 50-day moving average? And as the market, if we see that number rises, it tells us that maybe we are seeing evidence of a turn in market valuations. As a contrarian indicator, I generally like to point out using the Commodity Futures Trading Commission commitment of traders data and what the short or long positions are and who's in control. As far as either the S&P 500, as I've reviewed here, and or in addition the NASDAQ 100. If there's a little bit of too many positions open versus the open interest. That's also another contrarian indicator that gives us the who's in charge of the market and by how much. And the theory is if everyone's long the market and no one else comes into the game, then perhaps it's a little lopsided and it's ripe for a pullback. So we like to give when we see anomalies and historic position sizes or changes in position sizes, I like to include that for your information. Now, one of an old-time reliable indicators as far as breadth is concerned is called the McClellan Oscillator. And I do look at this, and normally speaking, this is a zero line, as you can see down here at the bottom of your screen. When we get a zero line sell-off in the market, and I'll bring that into focus here. So when we get that zero line crossover, not to get, most of you are familiar with the McClellan Oscillator. If not, may I strongly recommend you get the book, at least start with Mastering the Stock Market. This is an old-time tool that uses the advanced decline information, how many stocks have advanced versus declined over an average period of time with a moving average component, and it gives us a couple ideas. When the market reaches the red line, it's in maybe an overbought condition. When it gets near the green line, it's oversold. Crossovers coming back from oversold that go above the zero line are buy signals, and if the market goes down as stocks rise, usually, and then crosses below the zero line, would generate a potential sell signal. As I pointed out, the McClellan Oscillator did close below the zero line, and in the absence of any new profound developments, like, and a little sarcasm there, sorry, a new president, that would trigger a sell signal. But these are different times, and this is a warning shot that perhaps the market, we need to be aware that we're near resistance and aware of these indicators so that we don't get aggressively long at the top end of a move. So instead of giving you an opinion on the market, I always like to teach my clients. I look at a daily chart and compare that to a weekly chart, and these are the top 5 stock markets, and the middle quadrant shows you what the advanced decline is for the S&Ps on a daily basis. The bottom quadrant here is what the S&Ps relative to their advanced decline analysis looks like on a weekly basis. And as you can see in the Russell's case over here, what we've been pointing out is the breadth of the market's not performing as strongly as the other indexes are. As you can see, they're rising on a relative weekly basis, and on a daily basis they're rising, on a daily basis sideways, and on a daily basis price has gone up, but the breadth is going down. It's not in tangent or indicative of a very strong market condition at this point. With the NASDAQ, we've had an incredible run-up, and relative to the run-up, while the breadth is strong and the OBV, the balance, the on-balance volume indicator is strong, we are at a impasse of pivot resistance. So I like to include this chart every week in our analysis so that you may take a gander of the overall health and condition of the market on your own. Testifiable evidence as to what the condition of the market is rather than someone's opinion. Most people do not have access to that type of analysis because most trading platforms do not have it accessible. So that's why I include it and have created indicators so that we can take a look-see at the various different segments or stock indices of the marketplace. The next chart is if I see something that I think might be maybe not working or something we should be cautious with. One indicator that I also helped to build in Genesis Trade Navigator is this little relative strength index. And so basically this compares a particular stock to the S&P 500. Genesis gives us their seasonal tool, their seasonal trend tool, and then again the middle, or this quadrant here, shows us the volume. And in this past week we were talking about volume, relative strength RS, the price action, and seasonal analysis. I see a stall in this space. We're near resistance. This is NASDAQ NDAQ. This is the Chicago Mercantile Exchange, and this was, again, the Intercontinental Commodity Exchange, ICE. And as you can see, the market's rallying to newer highs, volume's not following through, relative strength is not following through, relative strength is actually declining, relative strength is declining. So I saw a stall in this space, as I wanted to alert you to. So in addition to that, I think this is one of the major aspects of the market of what I look for. When we place orders, I always like to give people the high probability setups for a week-to-week basis so that they can maybe do their own homework. Many of our clients understand what a weekly high closed doji pattern is. So I like to provide high closed doji symbols for you, and then when I see that with an additional filtering method, I actually put it in this little box. This box signifies these are the trades that I'm personally putting on. This is the name of the company, Pitney Bowes, the stock symbol. What we are doing is we are placing an order to buy at 1328 before the market opens on Monday. What's really neat about this type of methodology, it's gone through additional filtering. So I'm giving actual entry levels that you can place orders in. And of course, if Monday you look at the pre-session before you place your orders and you see Pitney Bowes has announced, let's say, bankruptcy and the stock's trading at $1, well, then you wouldn't be placing that order, right? But if these are filtered trades that we're looking for a high probability setup, for example, if Friday the market closed at a specific level, like, so this is a bad candlestick example, but let's say this is a candlestick pattern, right? And the market closed here, and I'm looking for the market to maybe pull back a little bit, and I want to see on Monday morning, or maybe it's Monday, maybe it's Tuesday, maybe it's Wednesday. I'm placing an open order to buy at 1328 with an open order sell stop at 1261. If the market Monday almost gets there, Tuesday almost gets there, I get filled on Wednesday, I have my stop working, and then the trade is triggered. So that way, this is a proactive way of looking at a trade. So if you're a long-only trader, you won't be looking at the short side of this. Now, in this case, let's say, for example, on a Monday, the market gets to, this is actually a situation that occurred this week. Pitney Bowes has a low of 1332. This order is what we call unable, UA, unable, did not get filled. It's still working in your account. By Friday, if the order does not get filled, simply cancel the order. We will have, or you may stalk it on your own. I am looking for new trades or better trades in the week ahead. So every week we are looking for trades, right? So that way we also have a profit target. So, and then the holding date. So this is a profit target. This is our stop level. And this is just like in the case of Milan, an entry and a stop and a profit target, and what the expected time frame, the holding date, is to see positive performance, or at the very least the first target, the profit target, the first target. So that's what we're trying to accomplish with the weekly thoughts and observation. If you notice down here, we generally put either an option strategy if someone wants, or for self-directed trader. You'll notice I highlighted NVDA this week, NVDA, as a weekly stock signal bearish low close doji. So because it is a more of a higher risk for self-directed traders, I thought we would see a 10 to 12% decline, as it says, from Friday's close, which would put the market down to maybe 93, 95. And I said we could spike up to the 112, 115 level first. Self-directed traders look for a 60-minute sell signal of a snapback towards that resistance zone this week. So if market conditions and timing allow, then I'll send an email alert out for a trade. So let's review Pitney Bowes real quick, and let's review Milan, Digital Realty, and NVIDIA. All right, so I've just teed up on a 60-minute chart so that you can see this was where the market closed on Friday, and then we opened up and we're looking to buy Milan. We're looking for a pullback, not to the weekly pivot and not to all the way down here to the weekly pivot support, the green line, but just slightly in the mid-range of that, and I thought the market could get a realistic pullback this week in Milan to around 41, and then we should see an acceleration to the upside. It therefore did not happen. If it doesn't happen by Friday, we'll be canceling those orders. Okay, in the case of Pitney Bowes, we're looking to be a buyer at 28. And so as you can see, on Friday, this is the 17th, the market closed, and I was looking for a very small pullback to 13.28, right around here. The actual low on Friday at approximately right after the open, the first hour of trading was 13.31. So we missed that trade by 3 cents. And again, the market, it was a close call. We weren't looking for a significant pullback in the market, just a small couple penny pullback. Came close, no cigar. We had great upside potential, and of course that did prove to be correct, but we missed the trade by 3 cents. Pitney Bowes has continued to run up and now is at 13.86, a nice percentage change for the week. However, if it's not filled by Friday, we're canceling those orders. And then DLR, as we take a look here at Digital Realty, we're looking to see if the market would rally up to resistance, rally first up to resistance, fill us, and then look for a decline. If we don't get that rally, or for example, the market on Friday does not fill those orders, we should probably just cancel those orders and we'll restart the week. I don't want to be taking in a new position on a Friday without an edge in the market, so we'll probably usually send emails alerts saying, hey, don't forget, most people know to cancel their unfilled orders at the end of every week. All right, so let's take a look at what we wrote about here with NVDA. As you can see, NVDA, again, I'm looking for NVIDIA for further declines. This is one that's been in the news and very popular. I bolded it. It was highlighted with other names because of the nature of NVIDIA, and also we were looking for this to tee up to anticipate in order to get a directional trade of the market. As you can see, my job is to try to give us substantial leeway and a heads up and anticipate market opportunities, and then give you a heads up so you know what to follow. We're looking for the market that it could spike up to 112, 115, and then look for a 60-minute sell signal and that's resistance zone for this week, and look for the market then to maybe go up and then back down. So let's see what transpired. So when the market closed on the 17th, it was around the, as you can see, the close at 107.23. I'm suggesting sometime this week that we could see an uptick near 112, maybe as high as 115, somewhere up there, right? But somewhere in that resistance zone. That's, we got to wait till it gets there, correct? So when it does get there, not just to sell at that level, then look for a 60-minute PPS sell signal. Those are those arrows that we have, both Genesis, TradeStation, and or Trade Navigator, TradeStation, and TOS. So with that said, let's take a look at what transpired. On, again, the 17th, the market closes. Here we have on the 21st, we come into the game on Tuesday, and the market rallies up, and it continues to rally, and it's going higher, and you can see that, and it actually has a high, and I'll bring it into, it has an intraday high at 111.80, 20 cents away from 112, pretty close to the resistance targeting of what we're looking for. But what we were trying to help our clients understand is, don't just sell it when it gets there. We need to wait for some kind of a sell signal when it gets there, and that's the key. So as you will see in just a moment, here we go. At approximately 2:30 in the afternoon, here is the defined sell signal, and we had a loss of momentum. The volume indicator, it also showed that the little retracement to the upside was losing strength. We got the sell signal, and no, it happened a little bit faster in that last final hour in order for me to send an email alert out. So in a surprising move, it actually did not get so far down to 95, 93, but we opened sharply lower and the market's trading near that $100 mark. So again, this is a trading system designed and ideas designed to help you, the investors, to stalk and look for trades and defining trends of the market. So whether it's AES and utility stocks, or whether it was NRG, which was a trade that we established way back in December, and based off a weekly high close doji, filled here, we scaled out, and then we're stopped out, and I'm still actually waiting to see if this market can pull back, by the way. And again, as other trades go on, the key is we look for high probability trades. We look for the market condition. I try to line those up for you and give you stock trades. And then as I see fit that I think are no-brainers, like the Bank America Leap vertical call spread. A little out of the norm that most people would do, but when someone said, gee, you're a little conservative on Bank America, when you look at Bank America and you look at an option for $1.50, $5 wide, $5 wide, $1.50, excuse me, I hit the wrong button there, I think, and I'll get Bank America up here real quick. Here the market at 24.52. It may stall and stay out or pull back, but I think for $1.50, the last time I did an option of a leap magnitude was Morgan Stanley last year in this advisory service, and when I think there was a lot, I'm sure not intentionally, but I would have certainly questioned, why would someone in July buy a $35 leap when the market was trading at $25, $26, right? Because I saw the potential that easily a year earlier in time, the market was trading at 40. So if you can buy the 35 leap that was the last time I bought a 2-year leap for $1. And then, as it turns out, we got out of that trade a little too early because now the stock is trading at 46. So there are some rhymes and reasons that I think are good places to put certain strategies that may help us with a risk-reward perspective. Just like I'm looking at the spiders. Are the spiders capable of a pullback? And can we see the market between now and December get down to maybe just back to 12.25, 12.26? I mean, after all, if the market does come back, and I'm not saying it's going to hit 12.15, 12.18, but we could easily see a small correction back into that level, which is why I wanted to have a little bit of protection on with a small position in this environment, as the market is getting, at least from a lot of different levels, slightly overbought. And some of those levels may consist of, number one, a kind of an anomaly where we see a situation where the market's moving on a substantial rally with very light volume. So light volume rallies tend to resolve themselves up. Either more volume comes in to help support price, or you see corrections. And that's why we put that strategy for the December option. So we put these trades out on a weekend so that you can examine to see if they fit your financial needs and your risk capital. In addition, we put these trades out with the entry levels before they happen, not after the fact, so that you have a shot of getting in. The filtering method is all done, and that's the extensive nature of the work that goes into this report each and every week for you, for your benefit. I hope you found this instrumental and beneficial, and I hope, as we have been doing this type of analysis for darn close to 3 decades, I try to give you guys what it should happen, at least in a heads up before it happens, so that you have an idea of what trades to take. So here's the ideas that you can take and follow along from an entry and where your stop goes, and then the first target. And I will email, since it's going to be too late if I email the market, say, hey, you got filled, or buy it now. It's after the fact by the time you open your email. This allows you to place orders ahead of time in the weekend. This stop tells you where to place your order. And maybe the market doesn't get to 14.75 from a 13.28 move. Maybe it only goes to 14.25. That's where I'll send an email saying, hey, you may want to raise your stop, scale out, let's get out, something doesn't look right, and we go with that route. Or in the case like Cisco, which is the same thing, had earnings risk. And this is a crazy earnings season. Stocks that they don't like and beat but give poor guidance, we're finding they're down 10 to 20%. Stocks that are good and they do like, they're up 3 to 4%. So in this environment, taking 10 to 20% earnings risk for a 3 to 5% maybe upside move in earnings season has been quite an unusual fate, especially the sensitivity of how the market has risen and at these lofty levels. With that said, I put down again what we expect might happen, what did happen, and what then our current positions are for the week. And what's, so it lists, and again, we can't really, if I send an email, oh, by the way, buy it now, and then all of a sudden it's off that level. So you're entering the orders before the week starts, and that's how we get filled. So good, bad, or indifferent, these are the current positions. This is the action that we've taken. And again, here are for those traders that want to look at commodities, seasonal spreads and opportunities there to see what is the seasonal tendency of the market. A lot of these trades have all been winners. Amazing. This one's the Canadian Aussie versus the Swiss. We did a webinar even back in January where we invited Tom Sosnoff on, and we were giving this information out. But these are the new trades for February. I think this is very important to have all in one sheet or one report every week. What's coming out? If you're trading, you need to know what's coming out. FOMC minutes, new home sales. So everything's coming in the form of information, earnings, all the stocks that have major importance that are coming out during the week. And it's listed all down, so it's an easy reference point for you. I hope you found this useful and more helpful, especially the workings of this particular segment of the market. When to enter, how to enter, and when to cancel orders. And then again, ideas that we could look for. On a final note, earlier in February, I gave another indication that I thought Johnson & Johnson would be a great pick and would have support down near the 110, 112 area. And ironically, it only got to, I believe, around 112.60, 112.54 handle. And then that's where you would go back and look at the first week of February where I gave a Johnson & Johnson outlook. And here that stock is now soared straight up to 121. So this was an area to look for buy setups for someone to look at Johnson & Johnson. So we've had in the month of February some really exciting both up and down. Johnson & Johnson, you may recall we talked about a couple stocks like I would be looking for a move in Teva. I'd be looking at Perrigo, another choice selection, and looking for some upside there. And both of those came to fruition. So I give out stock ideas for you guys to look at as individual traders, but more importantly, we'll also give out decisive entry levels on extra filtered, high probability trades. I hope you find this as valuable as it has provided a tremendous boost for incomes through the years, and again has a very dynamic performance track record that last year being one of a very difficult year, and again this year, as much as this rally seems to be everyone's favorite, not all stocks, as NVDA showed, are going up in this environment. So again, it does help us to understand relative strength and the basis of markets. And when I say that not all segments of the markets are going up, this is the energy complex, the XOP, not doing well in accordance to the overall market. So we have not seen me put out an energy stock yet because of the very nature of that. And but when we do see an opportunity, I will put it out for you. Thank you all very much. This has been John Person, and my pleasure to serve you. Thank you.